What's going on out there, good people, and welcome back to LMD Trading, where I am living my dream trading. Hope everybody out there is doing well today. As for myself, I am trying to catch a cold, y'all, and this sucks because I'm trying to travel on Sunday and I don't want to be traveling sick. Especially, I don't want to have COVID. So when I finish doing this recap, I am going to go and take me a COVID test just to make sure. But right now, just a sore throat, and I've been having this freaking cough that don't want to go away. So been drinking me some ginger, fresh ginger, lemon, and blue agave tea. Grabbed some elderberry cough drops today. I ordered some emergency to take. It should be here tomorrow. And I'm going to try to shake this thing before Sunday. But nevertheless, y'all not here to hear me complain about that. Y'all are here to see how I did trading today. And today, y'all was a very good day. But it was a little different. It was a little different, and it's going to be this way from here on out. Today, I traded out of 2 Apex eval accounts. So I have 4 Apex eval accounts. I had more than that, y'all. And I blew up a couple of them. And I blew them up being very reckless. I blew them up not trading my strategy, and it was only one reason I did that. If I was paying $160 for these eval accounts, which is what they charge, there is no way in heck I would have just been haphazardly taking trades and like, all right, I'm gonna try to make this money today to be able to have it funded. Even if it was half off, because most of the time these prop firms will always have a discount code. It's usually going to give you 40, maybe up to 60% off. Apex was giving 90% off. So on a $4 or $140 eval account, you were paying $15, $16. That's lunch. So if I blew up one of them, I was like, nah, I just want to eat lunch today. Nah, didn't really do that, because if you're in the Discord, you know I eat every day. But yeah, so I was like, yeah, it is what it is. Let me try to see if I can hurry up and do this. Number one, you can't do that. Apex, they got some things in their system to kind of protect themselves. So with Apex, you have to trade a minimum of 7 days. Still ways around that. You can make $2,000 in one day on where you need to make 1,500, and then for 7 days, you just take 1 or 2 trades a day and don't give back much money. But they want you to trade a minimum of 7 days based on the account size that you do the eval with. And for me, I have 4 accounts. One of them is a 25K account, and 3 of them are 50K accounts. $25,000 account, you have to make $1,500. You can't lose $1,500. So on a $25,000 account, you can't take the account below $23,500. You also cannot give back more than $1,500 in unrealized gains. Easiest way for me to describe what their threshold is. A lot of people have an issue with their threshold policy. Simply stated, if you give back more than $1,500 unrealized in the $25,000 account, they will blow your account up. I don't have a problem with that. And what I mean by that, just in case you're wondering, like when I say unrealized, if you are up $500 in a trade and you end up getting out of that trade and you make $200, so it's a profitable trade, you made money, but you gave back $300 unrealized. That goes into a little kitty, and when that reaches $1,500, you have blown up that account. I did that a few times. But when you watch people who have got funded through Apex, they tell you Small base hits will get you paid. Small base hits will get you paid. And that is how I kind of traded today based on using my strategy. So let's go ahead. I'm going to jump over into the trade performance screen. Looks a little bit different than what you're used to seeing when I'm trading out of my own cash account. That client dashboard is not available when you're trading out of a Apex account. But like I said, you see right here, I have two accounts showing, Apex number 5, Apex number 8. Those are the two accounts I traded out of today. So those other $50,000 accounts, they're just sitting there, not taking any trades on them right now. Reviewing trades for July 7th. I'm jumping around here. I took a total of 11 trades today. 8 winning trades, 3 losing trades. Percent profitable, that was 72%. Gross P&L, 1850. I gave back 580. That left me with a net profit of $1,310. I'm going to separate these real quick. So number 5. The number 5 account is, let me look over here. It's a $50,000 account. So net profits today on the $50,000 account, I made $585. Got to make $2,500. We're 1/5 of the way there. Let's go ahead. Let's bring up number 8. That one there. $25,000 account. I got to make $1,500 in this account. Almost halfway there. Again, this number is not accounting for commissions and fees, so you got to knock something off of that as well. But we did good today, y'all. We did good. Let's get back to showing both of them. We'll come down here. Look, average winning trades, $236. Average losing trades, $193. Want to be about 1 to 1.5 R. Really, that word R, kind of going round and round with that. I just want to take a trade and hit a target. But it's showing that my wins to losses was about 1.2. So we was about right there. Max consecutive winners was 4. Max consecutive losers was 2. Largest winner, 420. Largest loser was 320. Yeah, 420. Largest loser was 320. That's ouchish. That's ouch. Average time in the market, 4 minutes. This average number of trades per day, not sure how they plug that. Profit per month. If I continue to trade like this, they're saying that I should have a $40,000 profit for the month. You keep 90% of that and you give somebody else 10%. That's a good day. That's a good day, y'all. Long trades. Net profit was $375. I gave back $580 on some boneheaded trades. I want to look at these on the chart and see. At the time that I took them, I knew they weren't good trades, and that shows it. Short trades. We made $935 with no red over here. So we was 100% on those. 62% on the long side. Let's go ahead and look at the trades real quick, and then we'll bring up the charts. So if you notice, first 4 trades out the blocks, we were green on. At this point, I am happy. I'm like, okay, we starting this thing off good. I'm done. And then I went back to the well. I took a trade, gave back 145. Ouch. This one here, I got in the trade and didn't adjust the bracket. There's no way I was supposed to lose $320 on this trade. If you notice, I'm just in one contract on all of these. Make sure though. Actually, no, that's 2. What is this? Okay, that's a single one. I'm looking at that. Yeah, this one, I forgot to adjust the bracket, and this thing just whopped me and took me out for $320. So now I'm red on the morning. So I go from being up 385 to being down 80. Didn't let it get to me. look for some solid trades, came right back, took 2 trades, and now instead of being up 385, now I'm up 725. Go back to the well, I take another red trade. Okay, those are good. I can deal with a $115 loss. That's about 5 points on a NQ contract. No problem. Come right back, find 2 more good trades, 955, and there we go, closing the morning out 1320. We're out the market at 11 o'clock. So basically traded 2 hours from 9 o'clock to 11 o'clock. This right here is a product of scaling up. This is a product of scaling up. If I was trading this same exact way, trading MNQ, I would have made $131 today. That's what you usually see me make in my cash account. And that's why. It's all about scalability. If you have a profitable strategy and you can scale up, it shows. And that is why I need to be focused on getting funded so that I can trade like this. Because as long as I'm doing what I'm supposed to do, I can make money. But let's go ahead. Let's bring up the charts real quick. Something else that I found today, and this was a little later on in the day. If you notice this chart right here, looks a little wonky, looks a little funky. It's something that I found later on in the day. And as traders, we are always looking for edge. We are always looking for something to give us edge on a trade. I'm going to be looking at this to try to give me that edge next week. So this is my system. Left-hand side, this is the $50,000 Apex accounts ladder. Right-hand side, this is the $25,000 ladder. So again, I could take trades off of either side. 2-minute chart, this is usually going to be the 5-minute chart. 15, 60. Just like to run through my chart and my layout every time. But what I found today, myself and Spark were talking in the Discord, and he was mentioning that he likes looking at Hakanachi candles, and I probably butchered that. Hakanachi candles. He says that kind of gives him an edge when he's in the trade. Not to get in a trade usually, but once he is in a trade. So I went and I tried to find it. I went to data series. You can pick the different chart styles. They have several different chart styles, but they didn't have Hakanachi. So I went through each of these, looking at them, trying to see if I can maybe find some type of edge. And I came across this Kaji line, and I probably butchered that as well. Kaji line chart style. And I noticed, and I'm like, that looks pretty cool. Let's kind of watch the chart and see what it does. Mind you, this is about 3:30 in the afternoon that we having this conversation. And I went online and I read about Kaji style. So Hakanachi, butchering it, I'm sure, but that is a Japanese candle style. Kaji line. This is a Japanese candle style. These candlesticks over here, these come from Japan. So you notice Japan has been in the market. I think this goes back to like the 1800s to 1500s. I pulled it up and I printed it or copied and pasted it over in the Discord. But yeah, check out Kaji line chart style. But simple explanation. Thin red line, you want to be going short. When you get this thick green line, this is a transfer, and this is telling you that the market is shifting to go long. So I wouldn't use this on its own, but when you tie it in with your strategy, I think this gives a nice little edge. And just kind of watching it at the market close, we were seeing like, yeah, this is actually giving some edge. But let's go ahead. Let's start reviewing these trades real quick. I had put this over. This was the first trade right here. I'm going to move it out the way for now, though, just so you can kind of see. Getting in this one, right before the market opened, we had a nice little green candle. Get this doji right above this line right here. And something else before I really get into these recaps. You notice that this chart does not have a lot of lines on it. I wasn't trading off of this chart. So how I have this screen set up, I can come here, put this on MNQ. And if you notice, the instrument over here doesn't change. I'm still trading NQ. This one here, I have to change it to pink because I was trading on my laptop. But both of these will still say NQ while this is showing the MNQ charts. MNQ charts I have marked up how I like to have them marked up. So this weekend, I'm going to have to mark up the NQ charts, basically transcribe all of these levels over to the NQ charts so that I don't have to be trading off MNQ. I will no longer be trading MNQ in the Apex accounts. I've scaled up. So that's why you don't see the lines, but because I wasn't trading MNQ, you're not going to see the arrows on there. So I rather use what I was actually taking the trades with so you can see the arrows. So let's bring it back over and we'll just be going based off of those levels. And we're going to run through these trades real quick. So first trade that we took this morning was at 901. It was a long position. Was it? Let's see. Entry. Oh, I like this. I like this. It's showing the times the right way, and then it tells you market position, short and long. So this is not like how Ninja Trader shows it to you. So good job. I like that. So this was a short trade. Getting in at 901. So getting in on this candle right here as this is breaking previous day's close. Good entry. This thing makes the move. And you see I got out right here. I got out with this hitting my target. So remember how I was saying about the threshold? You don't want to let a trade go and then give back profit. So I put where I wanted to get out at, and this came and it hit me. But look how much I left on the table, y'all. I got out around 206. This thing went down to 186. That's 20 points. That was $400 in that move. But I wouldn't have wanted to like let this get down here and then pull back and tag me right there because it's going to eat into my threshold. But made $130 on that trade. All right, we getting our feet wet. Nice, decent trade. Next trade we take at 926. So let me go to the 928 candle since I know how Apex does their charting right now. This one here took 2 contracts. Getting in because you notice this has come down. And first, let's look at something real quick. So my entry is right here. I'm looking over here now on the Kaji line chart. Remember, as long as it is a thin red line, you're still safe to go short. I want to come over here. See how much you give back. You give back. So you have to kind of use these to work with you. So on an Apex account, I'm going to be getting out on the strong side. I'm not going to be watching this, but I still can kind of use this to base what the market is doing. If it's straight tells me I think we're still good to go short. But once it kind of flatlines like that, yeah, you see it right here. It's kind of shifting over. That may be an area to get out, but I kind of want to see what this was doing in relation to the actual trade. So let's come on back up. Second trade, NQ pushes back up, tries to get over this 50 moving average line, hourly 50, doesn't, pulls back, catches support, and we get a push back over the 50 moving average. Excellent entry, dialed in. Right as it breaks it, my stop is going to be below it. And again, I get out as this is pushing higher. So don't look at this like this came back down and tagged me. I got out on the strength as this was coming up. Now, had I looked to the left, look at that right there. I'm going to take F6 and I'm going to drop a line right there. Looking to the left, I should have known. First area of concern is going to be right there. Now, I'm sure if we go back over to the MNQ chart, it's probably going to show that. But that's how I would have did that. I just would have looked at this little wick and I would have dropped the line. So then I could have put my target, like say maybe right here. Don't try to take it all the way up, but maybe to about right there. Let's see how much we left on the table on this trade. 241. Let's go to right there. 247. That's 6 points, $20 a point, $120. I had 2 contracts, $240. But guess what I made on that trade, y'all? I made 145. So still a solid trade, but I can be a little more aggressive by just looking over there to the left and seeing this wick and knowing that that should act as resistance. So that was the second trade of the morning. Third trade we took at 950. It's 952 candle. So market comes back down, leaves this nice bottoming tail right here. Looking at the Kaji chart to the right, you see it is still showing bearish by being red. Comes back up and we get the green line. Me and Spark were talking. I can't take this trade right here. Several reasons. One, it's below previous day's close. It is below VWAP. So even though the Kaji is showing me that we've changed, I can't take that trade. I have to respect my other indicators. But when this breaks above VWAP, I can take this trade right here and put the stop down there. Now, that's a pretty big candle. That's 24 points. I don't know if I want to take a stop that big. That's over $400. That's a huge stop. But look at what it paid. Look at what it paid. So right here would have been a good entry. That definitely would have been a good entry. Now I could use this candle. That candle is 17. Still a little big, but it's doable. It's manageable. I get in up here though. So this makes this nice move up, breaks the hourly 50, pulls back. We get a doji that just breaks above it. I put my entry right there. My stop is at the low. That candle is 19. That's a $200 stop right there. As long as you got confidence in the trade, don't worry about it. We get the move. Again, I'm getting out on the push as this is coming back up. Let's look and see what's out to the left. You see, I already have a red line on the chart right there. I could have took this up again, just below it. Find it. So that's 74. Maybe put the stop at 70. Maybe put my target at 70. Let's see right there. I got out at 64. If I'd have got out at 70, 6 more points again, $20, $120 times. I was in one trade on that one. So $120 left on the table. Just by looking to the left, or I already had this line marked though, probably that little wick right there. And if it's a red line, this holds a little bit more weight than the blue lines. But what did we make on that trade? We made $110. This was one contract. So 2 contracts, I'm making $220 just in that trade. Do y'all see how this strategy can be lucrative, especially if I'm letting these trades work and actually go to the next level? Because the thing is to trade it from level to level. That's the strategy, level to level. And we see that they go level to level. I took this trade right here. Black line, that's the level. Blue line, that's the next level. What does it do? It goes right to the next level and rejects. Now, if it breaks over it, all right, so be it. But again, this trade would have made me about $400 to $500. I think that was, yeah, I said 500 on this one because I made 150 and it had about $400 more left in it. Would have been a $500 trade. This trade right here, 1 contract, would have been about $250 just trading the level. So that's what I got to work on. I'm gonna blow this up a little bit. Now these were the next trades. I went long, getting in at 10.13. First thing, what do you notice on this trade? I'm going long. I go level to level. This needed to be above this red line. Next candle breaks the new high. We could play this to go higher. I'm in right here below the next level. This is not good. Not good to the tune of $145 that I lost. Because again, look, it's coming down. And now it's such a bad trade that it's not stopping at this level. It's just flushing straight through it. Didn't even really make it down to here, but that wasn't a good trade. So lost $145. Next trade, I go long again. And look at where I'm going long at. I'm going long right here. Why? These are short trades. I could have took this trade right here, or this entry right here, short, and just put the stop on top of that wick. Look at that. You see how that works? 270 entry, 277 stop. So 7 points. I'm risking $140. And this is a short play. It's bucking the trend. It's bucking the trend. But remember I said this red line is heavy resistance. Look how many times we tried to break it and it couldn't. Why did I get the wise idea to think that it was going to break it and it hadn't even got above it? This was $145 stupid tax that I just paid right there. And then we come down here, we break this level, and then I go long right here. Why? What am I anticipating? What am I seeing? I'm seeing a transition into a downtrend, but more importantly, let's come over here and let's look at the Kaji line. And again, I was not looking at this at the time that I was trading. I didn't find out about this about 3 o'clock, but I'm getting in right here. It's still a thick green line, so it's still showing bullish. But when I use my strategy and I use my tools at hand, I'm below the red line. So even though that's still green, I cannot take that trade. It comes down, and where I get out at, look at what it does. It turns into a thin red line telling you the tide has shifted. This is going down, and boom, we get that big move down. I stop out there. Again, I come in, I get back in right here. It's still in a thin red line, showing you that it's clearly in a downtrend. This thing breaks this black line. It breaks VWAP. Like I said, my stop should have been up here somewhere. I take a little bigger hit. Just looking at that, where it stopped out at and where this was at, it's about half. So yeah, should have been about maybe $160 loss right there. Still was more than I should have been, because I shouldn't have been taking this trade. But those were the 2 big L's. Let's come on over. Now we see it's bouncing off previous day's close. We break below it. I get in off of this candle. My stop is going to be on the top of that candle. That's a 13-point candle. It's not bad risk. Get in, or actually, no, I'm sorry. Come over here. You see two arrows. I'm getting in right here short. I'm getting in right there short. No, sir. Short entry is actually all the way over here. That's the short entry. That's my good play. This is a FOMO entry. FOMOing in because this is failing. Look at what it does. Does exactly what it's supposed to do. Breaks previous day's close, comes back up, uses that as support to try to go higher. Getting in right here, where do you set a stop at? The stop is going to be the candle that you in. No, sir. Bad, bad, bad. But this kind of just consolidates over. We get the push down. Now we're below. Next candle to break that low is the entry. And then you use that as a stop. 17-point stop. Fairly thick size stop, but trading in a $25,000, $50,000 account, that's not that big of a stop in the grand scheme of things. So good entry was here. That's the good entry. We get the push down and I get out of that one. And I make $385 on that push. Let's look, 208. This thing comes down to 196, call it 195. So we leave some money on the table. Let's look out to the left again. You can just start kind of dropping lines. That probably would have been my first area of concern. So left a little bit of money on the table. Again, you can come down and you can just see how these levels act. But that's why I wouldn't want to use this one way down here, because look, I got to sit through all of that. So I probably could have, that one there looks like it has the most candles. You got 1, 2, 3 candles touching right there. So could have used that one there. So I'm going to go ahead. I'm going to F6. And I'm going to just drop a line right there. And again, like I said, I'll come back and I'll do these on the weekend. Man, this video is running long. Let me kind of speed this up. If y'all still here checking me out, I definitely appreciate it. If you hadn't hit that like button, now would be a good time to do so. Let's see. Let's look at... So we got those. Let's see. What else do we have? This is where we was coming out. What time is that? 10:56. That's like a 10:55 candle. So this was a red trade right here. Let's look at this one real quick. We were long in this trade. Let's look at it and see. Market comes down, leaves a little, not quite a total bottom and tail, a little indecision candle. Comes back up over the previous day's close. Let me bring this over too. We can look at this and see. So if we look at this, look at that right there on the Kaji chart. It's telling us to go long right there. And this thing just rips. It's telling us to go long right there. Interesting. But we go long up here. It's still telling us that it is in a bullish trend, but look where I got out at. It then came all the way back down. So this thing had went up, it came back down, because this does not show you like the tails and the wicks. It only shows you like the entries and the exits. Comes down, turns into a thin red line. It's telling you this market's about to go down. And guess what it does? It goes down and stops me out. Lose $115 on that trade. Okay, is what it is. Next trade though, I jump right back in and I start buying as this is coming down. That's why you see a blue arrow and a blue arrow. Because that's me buying and buying. This pushes back up. And I make back the 115 that I lost. So this was a winning trade. This entry was at, yep, 10. No, hold on. Let me see. This is a crazy one. I'm trying to see. It's a pink arrow tucked up in here. Because I took this trade and I got out down here. I got stopped out. I don't understand this. Oh, I got it. Yes, I see it. This trade here is a red trade getting out right there. I take 2 contracts right here going long and I get out up here. Now it makes sense. I'm in this trade at 10:55. I get out at 10:40 at 10:59 and 47 seconds. These 2 trades right here, I get out at 10:59 and 48 seconds. So long, this comes down, bounces off of previous day's close, comes back up, and I get out of the trade. And look where I get out at, y'all. Come over and look at the Kaji again. I get out as it turns into a green thick line. I get out as it turns into that thick green line, which is an indicator that the market is still bullish on this Kaji line system. But good trade. I probably could have stayed in this up to this blue line once I had already broken over this line, but I locked in, what, $700 on the number, 345 and 355, $700, and that got me green 300 or 1310. I'm like, I'm done. I am done. But this was a long one, man. But hopefully you found some value in it if you are still watching. As always, thanks for checking me out. I don't see my banner over here today. What is up with that? So, as always, thanks for checking me out. If you hadn't hit that like button, please do so. If you're not subscribed, please think about subscribing. And as always, we can continue the conversation in the comments. About to get off this thing because I feel a cough coming. My throat is irritated. And I'll pop me a couple of throat lozenges and try to relax. So, until next time, peace.